Well, sticking with the EV space, today we've seen some winners and some losers as Lordstown files for bankruptcy and Ford announces layoffs. Tesla, meanwhile, continues to win as Volvo joins its ever-growing network of superchargers following suit of major manufacturers. With more insight, let's bring in Greg Migliore, the editor-in-chief of Autoblog. Greg, let's start with the Lordstown story because, this is a pretty short run, even for a startup. Founded in 2018, filing for bankruptcy 5 years later. How much of this is specific to Lordstown? How much of this is a symptom of what's to come in the EV space?
Well, I think this is a really indicative of how, startups can basically fare if they don't have the capital that's required to maintain the momentum. There's an old saying in the car business that you need billions, not millions. Lordstown barely had millions. They were trying to get that $170 million investment from FOXCONN, and that was like lifeblood. $170 million is like change of the seat cushions for Ford or Tesla or Toyota. So they didn't have the capital that they needed to make a long-term go of it. So we'll see. I think there's a lot of startups out there that do have compelling products. They just need to have the business case. They need to have that customer niche to have that staying power. And as you can see, Lordstown didn't really have it at this point.
Greg, do you think Lordstown has some assets that some of the larger players within the space would be attracted to, would be interested in?
They have an electric truck that is fully formed. I've driven it. I'm one of the few people who have and maybe ever will. We'll see. It's a decent truck. It has a respectable electric range. It's capable. It's marketed at more of like a work segment. So they did have a defined plan. They just weren't really able to execute it. If you were looking to have like a turnkey operation with a factory, depending on how the potential litigation with FOXCONN works out, it's all right there. Like if you walked in with, say, $1 billion or something, maybe you could, get this off the ground and you wouldn't have to do the product development or some of the testing because Lordstown's already done that for you.
To what extent are we likely to see more consolidation in this space? Lordstown, sure, to Seana's point, we have seen them raising the red flag for a while. No real surprises here, but what about some other names that, at least from an investor standpoint, haven't necessarily gotten sort of the support, and there's a lot of concerns around just liquidity?
Yeah, I think when you look at Lucid, Rivian, Fisker, these are all like newer companies that have, much less capital to work with than the traditional automakers. I think they're all companies that you're going to want to watch. You're going to see, potentially we could see some M&A there, which I think could make some sense. A lot of these companies, like Rivian has 2 products, Lucid has 1. It would make sense for perhaps an existing automaker to reach out and maybe augment their portfolio by perhaps snapping up one of them. That could be a good strategic play. So I think we are going to see in the next, as the decade rolls on, some consolidation, some mergers and acquisitions. I think some of these companies, just organically, will probably go the path of Lordstown as well.
Greg, what do you think this means, or does it mean anything just in terms of EV adoption? The fact that if you have a name like Lordstown, some of the other smaller players within the space struggling to survive, is it going to have any impact, do you think, on getting more EVs on the road?
In this case, I don't think you want to read too much into it. I think Lordstown was a fairly niche company. They had they were like a work truck company, if you will. So I think, are they a sign for what other, startups could happen to them? Potentially. But at the end of the day, Ford, General Motors, Tesla, Toyota, you name it, they're investing heavily in electric vehicles. And consumers are going to have a lot of choices out there. They're going to have a lot of different options, a lot of different dealerships. So they're going to have options. If you're a consumer, you're probably actually not thinking of a startup because many of them are actually expensive or sort of narrow use cases. I think the mainstream automakers and Tesla will have far more options going forward.
That raises the question, how much of this in terms of adoption is about the car itself? How much of it is about the range anxiety and having the infrastructure in place? There's a new study out that points to just where the adoption is happening. Some interesting numbers, though, here from iSeeCars.com pointing to Hawaii, Oregon, Vermont, Washington, and California seeing the lowest growth in EV growth, we should say. So California, take that as an example because we have seen massive adoption there. We're still talking just over 15%. Nationally, about 10% roughly, maybe a little under. I mean, is that kind of the tipping point? In other words, it's easy to get to maybe a 20%, but getting beyond that is an even bigger hurdle.
Yeah, I think that's fair to say. I think what we're looking at right now is the products are there, they exist. There's a lot of great EVs. I've driven many of them. Right now, the next part of the equation really is the infrastructure. You know, how easy is it going to be to charge your EV? Where can you do it? What kind of plug will you be using? That's like the next great, unknown, if you will. And, you're seeing different companies are doing deals with Tesla now to get on the supercharger network and things like that make it easier for consumers. And that's really the next big part of the equation. It really is the network.
Is it about the fast chargers, though? Is that necessary as opposed to the level 2 chargers we see a lot of? Or does it need to be even more ubiquitous? Do we need to have something like wireless charging in order for drivers on the sidelines to feel comfortable switching over?
So, I mean, not to be a cop-out, but it's all of the above. I mean, it really has to be a situation where when you pull into like a charging station, it's accessible, it just works, and that it's quick. You really need to have whatever your EV may be. It has to be capable of fast charging, and most of the new ones are. And you need to be able to do that at whatever roadside, place you're going to. It's got to be basically like filling up your car with gas. And I think, are we going to get there in the next, 10 years? Maybe. I don't think it's going to necessarily be like a 2 or 3 year thing, just because there's so many challenges to getting above, like you said, that 10, 15, 20%. Like right now, there is enough infrastructure to service the people who are early adopters, who are really into electrics. But once you get beyond that, there's millions of people in this country, and you need to have a lot of options, and it all needs to work. And I think that's a really big challenge right now.
Yeah, range anxiety, lack of infrastructure, I think keeping a lot of people on the sidelines when it comes to EVs. All right, Greg Migliore, great to have you, Editor-in-Chief of Autoblog.